What is going on, guys? It is Chris here and welcome back to another video. Today we're going to be talking about how I was able to make 52 green trades in a row, or rather alerts for you guys in the Discord server. Here's the log from about the beginning of August into the beginning of September now. I've been able to do 52 green trades in a row or alert them for you guys. Of course, I've taken my own trades outside of that. Overall, I'm consistently having 90% win rate months and weeks, and it's very rare that I'm having, losing days due to a few rules and mindset tricks that I follow. So I want to explain all of those to you guys today. And if anything today appeals to you and you want to learn more about it, I do have the SPX class that has 20 segments. All of this is available on the SPX Class info document, which I'll put in the description. It'll be the first link in there. But this teaches you all of my strategies, but I'll talk about some small ideas which relate to a lot of these larger strategies and ideas in the class. So these are the things we want to be talking about today. And the first thing I want to talk about is your mindset. So of course you've heard this from many other traders. Yes, mindset is very important. You have to understand how to trade. You can't just say, we're going to the moon or this is going to crash a lot. You have to have a trade plan or something that's making you take these trades, correct? So you have to have a strategy, or at least a fundamental idea of why the market is moving in certain directions. And I want to add on to mindset here as well, that I don't think anyone should be aiming for 100% accuracy. So for example, if we scroll back on my log here, you're going to see that although I'm consistently green for many weeks, I'm having a lot of red trades as well. So as long as you're being consistent and still taking those losses. So for example, you can see my losses during June, very consistent on my gains, but my two losses were very large, 60% and 80%. So since then, I've been able to refine my strategies, and I think that's something very important. You cannot be letting these trades go that far into the red. So I always have a strict stop loss of 50%, but typically when I'm exiting a trade for a loss, it's because my trade plan has broken. So for example, this is probably the biggest takeaway of the entire video. Let's say that we are in a trade around this area and through here, and we took calls. And basically we're thinking that since we just broke this level up here, we're just playing a level break. And now that we've gone into some profit in here, now that it's dipped back below, we're at a loss of say 10%, and it continues to dip and it continues to dip. So at this point, at the very low here, I would say maybe you're down 40%. But if you had cut over here, say after it broke back below this level as a liquidity grab, you can be down 15%. So you save some profit and it saves you some headache. Because a lot of traders, what happens, and this is a very common mistake that I used to make and still do make sometimes, is I hold it out off of this extension. And now after that happens, I'm panicking. I'm down 40-50% and it starts to chop. What happens then is, even if it's moving up, these big red candles, if you're in calls, right, on 0TTE, are going to be killing your premiums. And after the move happens, then your brain is just gonna be like, oh my god, I didn't hold on, it could have been 100% gain. So I think that you have to be taking each trade individually. You have to be looking at a certain part of the chart. So if you're in calls here due to something, there's some sort of motivation that made you take this trade for calls, something that was bullish, and you can't be looking at the chart afterward. If the chart looks good again for upside and through here, now it's approaching that level again and it broke, hey, do the same thing, take calls, and this time you'll make 60% if you held this trade, but you lost 40% here. So instead of having the loss and holding the loss here and then cutting right before the breakout, you cut your loss small and then you take another trade if the setup reappears. So that's important for mindset, and it's just not realistic to have 100% gain or 100% accuracy. So for the last few weeks, I've been kind of struggling myself, actually. I'm going to be just completely honest with you guys. I've been struggling with providing the alerts that I think are going to be good for you guys, because I have strategies, many strategies, of course, that I explain all in the class, that have 85-90% accuracy. But I don't want people full porting my trades, right? And now everyone thinks, okay, Chris is super accurate. He does 100% all the time. He doesn't lose. That's not realistic. So you guys have to please keep that in mind. I'm probably going to be having a loss. I can tell you, I'm going to have a loss this week. There's going to be a trade where I have a loss because it's limiting me on my side. I can't alert any more trades or more trades that I would want to, because of the fact that I'm being so strict with my rules. I could be making a lot more money if I took more trades and more volume and more mass, but I'm not, because I want to keep that consistency. And that's something that's, not doing well with my mindset, right? So that's mindset. That's extremely important. Now, these concepts in through here, we can speed through because they are important, but it's very simple. And it comes down to simplifying your trading. So for example, if you look at my 5-minute chart here, all the three indicators you see are basically VWAP, this red line, my 9EMA, this pink line, and I have my sound wave down here, which is just volume. So I'm going to say two indicators, VWAP and 9EMA. So that's all I'm using. For me, that works. I see a lot of other people with many indicators, and I don't think it's that important to have all those indicators on your screen, because you have to confirm with them with each and every single indicator in order to find the perfect entry. And I think that's going to be messing again with your mindset. You're going to be wanting to confirm all these trades with all these different indicators, and it's just going to kind of break down your trading plan. It's not really going to work as well. That's something that I went through when I was sort of a noob trader, and even a few months ago I was using too many indicators. So please keep this in mind. Simplify your trading. It doesn't have to be 9EMA, it doesn't have to be VWAP or the sound wave with volume. Just find something that works for you, because again, it's what works for you, and if it's working for you, then you have to continue doing that. Now, the third thing is studying the same patterns. So with studying the same patterns, what I mean is, say it's a trend line break to the upside with low volume. Basically 9 times out of 10, I know when I'm able to identify this structure or this breakout, that it's going to dip back below, and I can take puts for almost every single time, at least 40%. That's nearly guaranteed. I'm very confident going into this trade. That does not mean that I go with more sizing. You have to continuously keep the same sizing, depending on your bias, of course, as well as how much you're willing to risk at that portion of the day and the setup. But you want to be keeping the same sizing. And so even if you have this really great pattern and you're studying this pattern frequently, you can't be putting more and more money every time, unless you are, of course, compounding your account. So this is very important. Studying the same pattern, get that pattern down, understand why that works. And if it's working, say, even 7 out of 10 times, that is a consistent pattern. And you want to be studying it for over the course of several days, several weeks, several months. I have many strategies that I've just learned about and made, but they've only been working for a few days. I haven't been able to back test them for many weeks. So that's important. Study the chart when you're looking at it. A lot of people just look at the chart and just go, oh, we're going up, oh, we're going down. Understand why it's going up, why it's going down at that certain point. So then in the future, tomorrow, you're able to identify, hey, I saw that yesterday. This could happen now because of what we saw yesterday. Now, I'll go over this as well a little bit later in the video, but I want to talk about patience, and patience is very important. There are many times where people do not wait for a candle to close. I am a victim. I'm someone who does this same mistake as well. When I don't wait for the candle to close, I think that we're about to break a level here. So for example, I think we're approaching this level. I'm going to play puts. This is a very common strategy of mine, but I don't wait for this candle to close. If I had entered puts here, I would have lost a lot because, you know, it rallied right afterward. So something that's very important is waiting for a candle to close, as well as just patience when you're trading. You can't take every single move. You can't take this move with calls. You can't take this move with puts, and again calls, and again puts, and again calls, and again puts. You can't take every single move. So being patient throughout the majority of these moves and be able to capture the right one or the biggest one is going to be very important and key in your trading. I think that this is extremely important. Having that patience is something that many traders don't have in, you know, in their trading strategies and whatnot, right? So that's super key. Now, last thing I wanted to talk about is correctors management. We did talk about this a little bit earlier in the video, where we want to be keeping the same sizing, but I see too many people upping their amount that they're putting into each trade with contracts just because they made a profit the previous day. Hey, this worked. I did it with 2 contracts. My account is, I use 5 contracts and that's half my account. I'm going to up it to 7 contracts with more than half my account just because I saw the same setup yesterday. You cannot be doing that. You have to be keeping the same sort of sizing on each trade, as well as understanding why that happened yesterday and how this can happen the next day, but you've only seen it happen once now. So what? It happened once. It can happen twice. Yes, it can happen 3 times, 4 times, but you want to make sure that you're studying that pattern for more than just one day. And as well as having the correct sizing, you want to be able to know when to cut. So a lot of my trades that I did in the past, as we saw earlier, there are many trades where I had larger losses. Now, as you can see, as we scroll further down in the log, there's actually smaller losses. Sure, there's 80% here, 76% here, but my losses are getting smaller and smaller and smaller, at least from my perspective when I'm cutting my trades. because what I realize is, hey, this setup is going against me now. It's not following my plan. I want it to follow exactly how I drew it out, and it's not following. So that's when I have to cut the trade, or exit for a loss, correct? So that is something that is super key. Practicing the correct risk management, not just in contract size or value, but also with when you're cutting these trades because the setup is going against you. Now, last thing I wanted to talk about, and this is kind of unrelated to these topics over here. It does come back to simplifying your trading and studying the same patterns, though, is just a trend line break. And this is, you guys probably came for this portion of the video. This is the meat of the video here. How did I, make 52 green trades in a row? And this is a very common pattern that I would probably trade, I want to say 10 times per week at least, upside, downside. Obviously it has to go upside or downside for this to work, but it's just a trend line, right? I have a trend line resistance in through here, and when this breaks out, I want to be measuring the risk to reward. Say VWAP is not here, for example. When I start to see this dip and approach my trend line again after this very nice breakout, this had very good volume, right? Very bullish setup as we broke out here. This retest now comes below the trend line. Why did that happen? Do we understand why that happened? Yes, I understand, and I'll tell you guys. The sellers came into control here. This was a failed breakout. So as we approach the trend line again, the risk to reward in this area is extremely good. So I almost always will take puts here, and that's how I alerted a majority of these trend line break trades. In through here as well, this is a little bit more chopped to the upside, and it's holding the 9 EMA. You can see this is a very abrupt break. This is a liquidity grab. The bulls are in more control. But when they do dip this back down here, look at this entry point. We had the trend line, and now we broke out again, and now when we retest for the final time, this was our reversal zone, right? So it's actually at the very tip of the trend line here. It's just a huge retest before this massive run. So these, I would probably alert one trade here, boom, 2 wins. That's it. I can be done for the day if I need to, right? You don't see me alerting more than 2 to 3 trades per day. So this is a very common pattern. And then the last one is, and I don't know if anyone's even sticking around to this part of the video, but this is super important. And you guys say, okay, another trend line, Chris, and yes, another trend line. This is such an easy gain 99% of the time. Again, not 100%, but I want to say 99% of the time because I've almost never seen this fail. You can be using the trend line to the upside as a magnet. So we are in a bear market right now. We are going down, but on these bullish days, it usually tries to attract to a certain level as a magnet. So what I mean by that is, okay, we have a trend line right here, and let me just make it very accurate. So we have a trend line right here, we reject and we reject. And now we extend this trend line, and we're going to the end of the day here, and we actually had a lotto that went for, I think, when was this? We did the lotto here for 1,000%, 3,955s. This made you 1,000% and 725% off of this play. When we are approaching this trend line to the upside, do you think, ignore this part of the chart over here, do you think as a trader we're going to see this move and now we're just going to randomly reject here and not touch this trend line, which is being used as the magnet? For me, no, because I haven't seen that ever really happen. This is the magnet up here. So even if it's right here, the risk to reward on puts is absolutely horrendous. You don't take puts when it's approaching the trend line. Sure, it'll have a few dips, a few wicks, but as you can see, if you had entered puts, you would have lost immediately. A 3-point move to the upside. So this is the magnet, and when it hits that magnet, then it starts to consolidate in the after hours and through here, but it does have the dip right after it hits this level. So this is trying to be used as a magnet on that move to the upside. So this is very key. And then for the downside as well, like on this trend line, I don't think there's a great example here, but this is what you want to be looking for. It's a magnet. You see the trend line, and now when it's approaching again, it's almost always, not 100%, but almost always going to be hitting that level. Same thing goes for, say, a double bottom, a triple bottom. These sort of levels, they try to be hit, either used as a liquidity grab, but they try to be hit. And this is where the market makers then can make their big move to the opposite side or continue it to that upside or downside, right? So that's all I have for you guys today. I hope you guys enjoyed the video. These are very key concepts. And again, if you want to learn more about these concepts or all my other strategies, we have the class here, 20 segments. Every single video is talking specifically about that one concept and idea. And we have the info doc, which I will put in the description. So you guys let me know in the comments if you have any other questions, as well as in DMs for Discord. But I'll see you guys in the next video. Thank you for watching. See you guys.